Hello and welcome everybody to today's live commodity market analysis with the Gold and Silver Club for the 20th of October 2016, presented by myself, Phil Carr. So during the course of today's session, we will be covering live market analysis. We will be going through a watch list of trading opportunities, an overview of the commodity markets. We'll be focusing on gold, silver, oil. We'll of course go through our top trades of the week, and we'll be answering questions during the session. So any questions or comments or feedback, do put those into the chat. So let me introduce you to the Gold and Silver Club. The Gold and Silver Club is the #1 commodities trading and investment coaching company. We are regarded as the go-to authority on commodities trading. As internationally respected experts, our analysis and our opinions on the metals, the energies, and the agricultural markets, they are routinely sought by major financial television channels and publications, which include Bloomberg, Reuters, CNBC, the Financial Times, the Wall Street Journal. Of course, it's a pleasure to be here on FX Street as well. Our team of experts has trained and mentored over 125,000 private traders from all over the world to increase their wealth and generate substantial income through commodities using our exclusive research-driven strategies. For more information on the Gold and Silver Club and our expertise, feel free to visit our website, which is at www.thegoldandsilverclub.com. Okay, so what we'll do, guys, before we go into the charts and start to have a look at the markets, I'll just bring you up to speed on where we're sat this week with the week's performance so far on a number of different markets. So in terms of the commodities we track, we've certainly seen some movement and sentiment to the upside this week. On gold and silver are up over 1%. We've had some good inflows into coffee, cotton, and crude oil this week too. In fact, yesterday we saw a 3% move to the upside with crude oil, and we've also seen the grains have additional momentum to the upside this week. That includes corn, of course, soybeans, and wheat too. So we have seen generally a bullish sentiment in a lot of commodities so far this week. So with that being said, what we'll do, guys, we'll move over to the markets and we'll go through some technical analysis. So I want to start off here with gold, which to me is looking very interesting at this point in time. So if I just zoom out a little bit, I'll just bring out all of my levels on the chart for you. Hopefully you can see that well. Okay, fantastic. So first thing I want to point out, which has been very interesting here on this breakout that we've seen with gold, is that we did hold on to the lows at 1,250 US dollars, which we formed prior to Brexit, where we saw a 1,000 point move to the upside on Brexit when the UK came out of the European Union. And with that, we saw a huge move to the upside. Now, it's interesting right now. In fact, gold's just broken resistance right now, 1274. So that is starting to pop. So 1,250 US dollars. It's been an important level on a closing basis. So although gold has breached that zone and we've had retests below it, it didn't close below it, which was important. In fact, if we had a close below 1,240 US dollars, and especially 1,230 below that, it was very likely we would have seen a move down to the 50% Fibonacci retracement level, which sits at 1,210 US dollars. That would be a 50% correction of the run up at the beginning of this year through to the highs that we got after Brexit towards the end of June. Now, we've had this sell-off, obviously significant sell-off more recently, one of the most significant down days on gold here for over about 18 months, this big sell-off that we had a couple of weeks back. Since then, gold has remained in quite a significantly oversold condition, and we've seen it just grind higher. All of last week, it held support. It continued to consolidate and ricochet between support and resistance. And by the time we finished on the weekly chart, we developed a inside candle here. So this candle here was fully engulfed by the previous high and low. So this often gives rise to a potential breakout trade. It could have broken below support, in which case there was downside risk here for gold. Could have been a shorting opportunity down to around the 1210 to 1200 zone, but it was quite significantly oversold after this move to the downside. And you can see here gold is starting to pop. Now, I am expecting a retracement here. We've been looking at this actually over the course of the last week. We have positions on the metals right now to trade this retracement. And what I'm looking at in the short term here is just to pop back towards previous resistance. There's a lot of overhead resistance around the 1295 zone. We broke through 1300s. that was the level which really saw this waterfall move to the downside with gold, where it sold off very quickly. We've corrected off the highs of 2016. Now, a few points to note. Gold, your typical correction for gold lasts between 1 to 3 months. So especially after we've had a run up like we have this year in a bull market, when we do get a correction, you can expect historically an average correction on gold lasts between 1 to 3 months. We've now been going with this correction since we topped out at the beginning of July for over 2 months and 1 week now. So we're well into the sort of time frame that you would expect gold to start to retrace and build up some sort of a retracement here to the upside. And that's what we're seeing at the moment. Now, if we can get a break back above the 1275 zone, and we seem to be heading for that today, we've just broken above a monthly pivot. Actually, if we break above the 1277 zone, I see the potential, and I mentioned this also on last week's commodities chat, that we were looking for a move back towards a retracement, back towards the 1280 to 1300 zone. And that's what I see playing out at the moment in the short term. Whether this is the bottom is in for gold at the moment, I would suggest that we are going to get into an overbought condition once we get if we do retest the 1300s. I've come off, a lot of our indicators here show we've come off a significantly oversold condition. But if we do get a move back towards the 1300, we're going to be moving into an overbought condition. And I would just be wary of overhead resistance here around this zone. It is a point where we could see gold get sold back into. Short-term retracement is all I'm looking for the time being. Now, if we do pop up to the 1300s and then we sit at that level when we move sideways, yes, then there is potential for another leg higher and a breakout above this overwhelming trend channel which we had previously, which got broken to the downside more recently at the end of September, beginning of October. So if we were to see a full-on reversal here from this point, which then led to a break back up to 1300s, consolidate around this zone, then break out, yes, I do think we could go quite significantly higher here on gold. However, on the flip side of that, if we just have a shallow retracement, previous support, excuse me, becomes resistance, and then we just rotate lower. If we see sellers come back into gold here, we could be setting up for another significant leg lower, which could certainly retest the 50% Fibonacci level at around the 1200s, if not lower. And the basis for that is the fact that the US dollar is rocketing. It's not slowing down at all here. We've just consolidated over the last week, following on from the previous week's gains, and we did reach an overbought condition, but it's just been consolidating sideways over the last week here, where it's just managed to rocket back up again today, broken above 7-month highs. And it does bode well for gold and silver that even with a dollar breaking out to 7-month highs, gold's just broken out as well. It shows you there's some temporary good momentum there's some good momentum for the buy side right now for gold. But the US dollar breaking out to 7-month highs here over the course of this afternoon does mean that I would be wary here with the potential for too much upside here for gold in the short term. I think certainly we can pop higher here and go back towards the 1280 to 1300 zone. That offers a short-term opportunity here. You can see that very clearly. We've broken out of this box, this consolidation. Nice pop there for those of you who might have entered in at 1265. That is moving quite nicely. We've just broken above yesterday's high. Interesting, even with the US dollar breaking out to 7-month highs, that gold and silver, they're still managing to break out today. So I would say sentiment in the short term is to the upside. Now, if we go over and have a look at silver as well, silver, we've had a similar formation. In fact, silver looks like it is gearing up to break above this resistance as well. It did very well in respect to holding on to the 200-day moving average and also onto the 50% Fibonacci level here for silver as well. So last week we had a retest. We came actually on non-farm payrolls. This is where we broke through. We hit the 200-day moving average. That's been like a brick wall here for silver. Buyers came in at that level. We formed a hammer off that zone. We had a 50% retracement. If you take into account the highs of 2016 down to the lows of this year, we hit that 50% Fibonacci level. We haven't really closed below that level since non-farm payroll. It's been channeling sideways. We're starting to build a bit of a base here, higher highs, higher lows over the course of this week. What I'd like to see now is whether we can pop slightly higher here and get a break above 1785, which could lead to some more follow through up towards the 1850 zone. That's what I would look at for a short-term target here, just to take advantage of this momentum to the upside, retest the upper end of the trend channel, and then we need to assess silver at that point, because then it will be in an overbought condition in the short term, in the shorter term indicators. But then we need to assess if it does break out to that level, and it's not fully done that yet, so there is still the potential for silver to roll over here break back below the 200-day moving average and come lower, but so far it is creating higher highs, higher lows throughout this week, and it's starting to look like it's ready to pop here. If it can get above 1785, I do think silver momentum will kick in. We'll get buy orders triggered, and we'll start to see more short-term follow through here back towards the upper end of this trend channel. So that's what I'm looking out for at the moment on the metals. Now, bringing it back to gold, I also just want to put on your radar here. We'll go through some of the news items as well, which are coming up as we go into the end of October and also November, which we, of course, need to be aware of here. So as we go into November, this could really be a lot of volatility and give really some excellent trading opportunities. So the first week of November, we have on Wednesday, the 2nd of November, we have the FOMC statement. So, of course, that could be a major mover for the US dollar and also for gold and silver. And we'll get more clarity with regard to an interest rate potential hike in December as to what chance that has of going ahead or not. So that will be on Wednesday, the 2nd of November. Now, after that, we have the non-farm payrolls, which are on Friday, the 4th of November, which come just before the elections the next week. So we're in for some volatility the first week of November. And then that should set up for some great trading opportunities as we move into Tuesday, the 8th of November, which, of course, is the US election. And that is really I'm really looking at that as a potentially huge announcement for the markets, as I'm sure a lot of you are. There's a lot of uncertainty currently revolving around the election. And if you have a look at the shock result that we got on Brexit, that caused a 1,000-point move to the upside. So if we were to see a shock result on the US election, I would definitely look towards the precious metals, the US dollar, for some huge moves. And of course, equities will have similar moves, but the constant correlation that we tend to get is where you see increased volatility, increased fear in the market, the VIX volatility increase, the volatility index will increase, and with that you see gold and silver bid up as a safe haven. So it is something to bear in mind for the metals here. Okay, so that's what we're looking at for gold and silver. I see some great opportunities coming up as we progress into November, and I'm looking for the short term for some more sentiment to the upside here for a little bit more follow through. I think gold is really leading silver this week. It's up over 1% so far, and I would look, in fact, it's up over 1.75% on the week, so I would look for the potential to gold to just grind higher here. Now, if we move over to oil, oil did break out yesterday. We had a 3% breakout to the upside. We broke out of a pennant formation, which we've been watching here closely on oil. So we had a breakout of that level. The oil inventories really were the catalyst for that breakout yesterday. And we saw the 2016 highs breached here. Now, on a closing basis, it was the best closing price on oil going back to June. We've also come back down to a supportive zone that we are interested in here to see whether it gets supported around this level for oil and whether we can make a move and a close back above the 2016 highs, which would then put us in good stead for the second leg up higher in the bull market that we transition to this year with oil. So at the moment, we're consolidating. We did get a breakout yesterday. Look at the trend channels on oil. This is very noteworthy. If you trade oil, you'll know that trend channels are very important. A lot of traders utilize them with oil. Very simply, we broke out of that pennant. Look how well the lower end of that zone is just now finding support. Broke out of a pennant. That pennant could become support. Previous resistance channel becomes a supportive channel, and then we might get ready for a turnaround and a pop higher. If that doesn't happen, and oil continues to follow through, breaking down here, I'm looking at potential entries between 47 to 49 US dollars per barrel. Otherwise, if we turn around, we get another breach above 52 US dollars per barrel, I would suggest that lens for another breakout trade back towards 54 to 55 US dollars. We're watching out for that opportunity. And of course, we keep all of our traders at the Gold and Silver Club updated on each position that we are taking. You can get to know our exact entries, our exit points, our profit, our stop loss targets, every single step of the way. Now, another market I just want to put on your radar. I know not so many of you necessarily trade this market, but just be aware of it if you do trade it. Sugar at the moment has started the breakdown. We've been looking at this for a while. We've broken through this pennant formation, been looking for sugar to break down for some time now. It's been consolidating at 4-year highs. It's just started to break down today. I'm looking for a buy at lower levels here. Sugar has been the best performing commodity of 2016. Up until last week, it was up 42%. I'm looking for a pullback. There's a buying opportunity. Short-term momentum I see to the downside here, but I would have that on your radar as well if you trade the softs. Okay, so just be aware of that on sugar. Okay, so just moving back again to gold here. Overall, for those of you who trade the metals, I'm looking for short-term momentum to the upside. We've already broken above the first entry level here, 1265, broken above this consolidation. We've also found the 1250 level, providing good support here. We've not closed below that level, so I'm looking for short-term sentiment to the upside, and I would look for a move back towards the 1300s here. So 1280 to 1295 could be the next major area that gold is going to target. That would also be the resistance zones going back to May and also June here prior to the breakout from Brexit. Okay, guys, so with that, what I'll do, I'll move over to the top trades that we've had over the course of the last couple of weeks here. So our portfolio performance, our trading performance update using our exclusive research-driven strategies. So first of all, we've caught a nice breakout trade here right from the lower end of the support channel on natural gas, which has provided us with a 425-point breakout trade. Brent crude oil has also been lucrative following on from the OPEC announcement, where we caught the breakout from this pennant. It was a 6% move in one day, a 10% move as we retested the highs at $52 per barrel for 500 points profit. And also we benefited from the breakout trade on cotton as well off the back of last week's USDA report, which showed us that the amount of cotton available inventories had reduced, and from a supply point of view that had affected the market, where we saw increased demand, reduced supply, and with that we saw a 400-point breakout, which we capitalized on. So those have been some of the top trades that we've had at the Gold and Silver Club over the last week and a half. And if you would like access to the trade setups that we're taking, our live trade ideas shared with you, ready to implement for results, of course you can gain access to the private members live trading room. All you need to do is go to www.jointhegoldensilverclub.com, complete the application form, and we will get in touch with you ASAP. Okay, so it's www.jointhegoldensilverclub.com. Now, who is that for? Who's it catered for? Well, really, if you're a new trader and you want to develop a solid understanding of the markets and fast track your results, or even if you are an experienced trader but you're really looking to take your trading just to that next level, the private members live trading room is definitely something for you to consider. Okay, so private members get access to our exclusive live trading room webinars. You can watch the Gold and Silver Club expert traders analyze the markets right in front of you, pick out highly profitable trade setups, share exact entry, exit points, profit, stop loss targets, as well as walk you through live trade ideas ready to implement. We also provide notifications, email and SMS, real-time notifications alerting you when to enter a trade. Those include exact details of where we are entering, exiting, placing our stop loss, and they're all sent out in advance notice to give you plenty of time to get into a position at the best price. As well as that, you get commodity research and market insights. So you get exclusive access to our proprietary trading research and market insights to help boost your win rate and help you be on the right side of each trade. Our trading research is there to give you the ultimate edge in the markets and really fast track your results. So everything that you get by being a member of the Gold and Silver Club and the private members live trading room includes exclusive weekly live trading room webinars. You get live trade setups ready to implement. You get real-time trade notifications via email and SMS so you don't miss out on profitable trades. You get the exact details of where we're entering, exiting, placing our stop loss, trade management, a weekly trading plan with a watch list of trade ideas for the week ahead, live trade support to help you through each trade, and institutional level trading research and commodity insights to give you the ultimate edge in the markets. Okay, so to get exclusive access to our private members live trading room, all you need to do is go to www.jointhegoldensilverclub.com, complete the application form, and we will get in touch with you ASAP. Okay, fantastic. So with that, guys, I certainly wish you good trading here. Have a fantastic day. And with that, we will look forward to hear from those of you who will be making application and joining us at the Gold and Silver Club. We'll speak to you very soon, guys. So all the best. And thanks, of course, to Adinda for putting on today's session. And we'll talk to you all very soon. Thanks, guys. Take care. Good trading. Okay, bye-bye.